Good morning and welcome to Mortgage Coffee Talk, sponsored by Canada Express Mortgage. My name is Tahir Aikureshi. I am a principal broker and also the host of Coffee Talk. Maxim,
Hi, my name is Maxim D'Souza. I'm a mortgage broker at Canada Express Mortgaging.
thank you. We picked up a topic about debt consolidation. So, debt consolidation is the act of taking out new debt and using it to pay off multiple old debts. And how we do about it, we're going to ask few questions to Maxim to help us out. Yet, can you tell me some experience about debt consolidation?
Well, desk consolidation, mortgage brokers offer it as a solution to, people who are, struggling with their debt or, people who are looking to simplify their finances. I mean, what is debt consolidation? Basically, you have multiple debts, maybe a car loan, maybe a credit card, some other line of credits, you have a mortgage, you have multiple debts, and you're now deciding to bring them all into one pool. It's like, in the investment side, they say, don't put all your eggs into one basket. But in debt consolidation, we would say, put all your debts into one basket. That's at times, this is a very good solution, an effective solution to people's finances.
Now, finally, after debt consolidation, you will have only one bill to pay because, and hopefully, it's a lower interest rate. Okay, it could work out excellent strategy to streamline your budget and also save some money by debt consolidation. So, what is the appropriate time for debt consolidation, in your opinion?
Well, an appropriate time will be for somebody, they have too much piled up credit card debt. Now, credit card debt can, their interest rate can range anywhere from, 15 to, 23, 24%. And they sometimes they also have these car loans. Now, I have seen car loan interest rate in the back in the days where, I mean, maybe they are even today, like up to 24, 26%. So, that's a very high interest rate, right? For somebody to, and if people are unaware of what their alternative options are, they just continue making those payments. So in a situation like this, it is nice, to explore options and see, what are the cheaper loan options. You need to know what your alternatives are. And in an environment where there are higher interest rates, you're on your other debts, it is always prudent to try and explore options where you can get a different loan to pay off your high interest debts. Now, looking at mortgage, so home financing or mortgage loans are considered to be one of the products which are offered at the lowest interest rate. So they could come out as a very good alternative for people who are paying high interest rate on their existing debts.
So basically, you are saying is that if you have a lots of loans, uh, particularly the credit loans on a credit card, you're paying a 20 plus interest rate. It's better to take a second mortgage or a consolidation of your loan. Therefore, you don't have to pay the high rate, and the mortgage obviously is much lower than yeah, even the what do you call alternate lending is even cheaper than the interest rate. So idea is to
Absolutely.
and managing too many debts consultant is happens because you got too many payments, and sometimes you forget to make a one payment that will affect your credibility, isn't it?
Absolutely. Now, to simplify this, when people are maxed out on their credit cards, like being in this industry, I have seen people have like 50, $70,000 in credit card debts. Like really? Like, and you're paying what, 20%? And people are just trying to make minimum payments because on the statement it shows as long as you make a minimum payment, you're good. But there are some fine details on that statement. It also tells you if you continue to make that minimum payment, how many years it's going to take you to clear that debt. I'm pretty sure a lot of people are unaware. A lot of people who have those credit card debts are unaware that how that impacts their finances if they just continue to make that minimum payment. Well, that's what I do. That I show them where it is. There are fine prints on their statements where it tells them the timeline that it would take if they make that minimum payment. Now, what happens is if you are making a minimum payment, that means your balance continues to be where it is. Yeah. And just in a nutshell, there is a lot to talk about, credit report and how the credit rating is impacted. But in a nutshell, credit utilization, how you use your credit, has the maximum weightage on your credit score. So I believe it's somewhere up to 35%. That's a lot of impact. So if you use your credit and if you have maximized on your credit card, you will eventually see your credit scores dropping. And that's not a good sign.
Now, the question is that is it not a good way to consolidate to get out of any debts that you have or manage it properly, your accounts, financials?
Exactly. So this is what we do, right? What I do is I work with homeowners who are, struggling to, make their payments on their other debts, where we are struggling with their cash flow, who are living paycheck to paycheck. They have no savings. They are somehow trying to, meet those ends. But, what we do is we try and educate them with alternative options. But again, like you just mentioned, second mortgage, alternative lending options. We have to review every client's situation to identify what's the best option. Now, when we talk about debt consolidation, we are talking about consolidating all your debts. But that doesn't mean sometimes we might not have a first mortgage as a solution. We might have to explore the second mortgage option as well, offering them the timeline to graduate and consolidate that first and the second mortgage. It takes sometimes, it's not like a slam dunk solution. Like you come to me and I'm like, I fixed everything. It takes time because, you've impacted your credit score over the years. So at times, a private mortgage or an alternative lending option like a B lender might be a solution for you to be able to, get your cash flow in line, improve your credit score, and then maybe look for an opportunity to go back to a bank or an A lender.
Yeah, the other thing is about debt consolidation. Lots of people think it doesn't automatically close your credit cards, but the only thing is maintaining those credit card create a temptation to spend the money again. So, what do you think that? What is your reaction that people think about that, or have you recommended them to close those accounts, credit cards, and reapply them later on? But just manage your resources so you have a best utilization of your financial resources.
Well, I do not recommend people to close their credit cards. I'd rather suggest them to, manage them better, because we have to understand this, on a credit report, you are building a credit history. So if you close a credit card, you've stopped in history. You're not building that history anymore. And what is credit? Basically, you're building a score based on your history, right? You're getting a credit score based on how you made that payment, how long you've had that, how you manage your credit limit, all of that. So if you close it, it's done, it's closed, right? At times, lenders do ask us to, inform the client to close it, and that's what they, condition the mortgage for. But I try, I care for my clients, and I try to go back to my lenders and say, you shouldn't give them an opportunity. And we all know that sometimes people have rainy days, and it's always good to have that access to those funds, so that if they need it, they have it. But what I do is I educate them more on how to use their credit. I tell my clients, try to avoid using the limit over 50%. So if you, for example, let's consider this, you have a $5,000 credit card, don't try to go over 2,500 as a limit. If you happen to go, let's say you made a large purchase, you made a $3,000 purchase, try to bring that under 50% as soon as you can. So this way, at least the utilization that I just mentioned a while ago, that 35% of impact that it carries, you're at least controlling and managing that, right? So I educate people on how, what they need to do in order to maintain their timely payments. I suggest having an automated monthly payment, so you at least know that you're not missing that payment. At least that minimum usage that, you look at your budget. You know that your family has expenses of, $1,000 a month. So you know when your bills are being generated, you know when your payment date is. Just try and schedule that monthly automated payment. This way, that minimum, at least that $1,000 that you're budgeting goes off, and you're not, missing that payment, which can have a huge impact. So what I do, this is what I do. I educate these people, and I, help them know how to, manage their credit rather than just closing it. But at times, sorry, this is a little bit extended, but at times they might have, credit cards which might have a limit of $500. Now, that's where the biggest issue is. Now, $500, $1,000 credit card with such a small limit, right? Going over 50% or reaching that 75% limit is quite easy, right? You just go to Costco with a $500 credit card, you probably spend all of it in one trip, right? So I try and ask them to connect with their financial institution, the credit card companies, and see if they can increase that limit. Having a decent credit limit and managing that credit card well is the best way to improve your credit.
Wonderful. So basically, it's a good way to manage your financing is to consolidate, because you have too many credit cards or other payments there at a high interest rate, and then you will be able to bring them into one umbrella. You have to borrow money to pay off the old debt. That's the purpose of the whole thing. Now, there are some challenges or potential downside of the debt consolidation, is because consolidation can lengthen your repayment period, and you will likely pay more in interest payment over the long run, because you have to look at your affordability, your income, cash flow, and then you tailor that. This may require a little bit longer period to pay that. So this is one of the the downside, but it's better than losing your credibility or living a hardship for not managing financing. And also, the other benefit is sometimes you have so many benefit to having a relationship with the multiple lenders, but you might lose some discounts or principal rebates, or some other things, or sometimes you end up paying some cancellation of loan charges because you have made a commitment. So this is the best thing, is to give us a call and have to speak to Maxium if you're looking to debt consolidation. So I'm going to ask you to give the final word and also give your phone number, so viewers who will watch this program will contact you and you can help them out.
To everyone out there who is struggling with your cash flow, who has a lot of piled up credit card debt or car loan, or any other loans, and if you are trying to, if you are living paycheck to paycheck, or if you are, struggling to make your ends meet, I suggest that you give me a call, because not only debt consolidation. Yes, debt consolidation is a great strategy, but at times, there could be other solutions as well. But if we are only talking about debt consolidation today, I am sure that there could be many options out there for you that can help you, improve your cash flow, lower your interest payments on your debt, get a lower monthly mortgage payment. That's also a biggest key here. So, feel free to reach out. We can definitely sit down and talk about your specific solution in detail. And I can definitely, tailor a solution that meets your financial needs. All right. My direct phone number is 437-353-9977. Or you can email me at info@Maxim. It's MAXIUM D'Souza. That's DSOUZA.ca. Once again, this is Maxim D'Souza, your mortgage broker at Canada Express Mortgaging.
Thank you very much, Maxim, for joining me today. We're going to continue various topics to increase awareness and building consumer confidence in mortgage financing and promoting good ethics and business practices. Thank you. We'll see you next episode very soon. Take care. Bye for now. Bye for now.
Thank you. Thank you, Mr. Qureshi.
Bye.